Hi, everybody. Welcome back. My name is Craig Kern. I'm the founder and lead educator here at True Alpha Trading. Today is August 9th, and I'm just back here to give you an update, to take a look at the price action that occurred this past week, as well as give you an update on my position and how that looks at this point in time. And so, again, these updates are just to give you a look over my shoulder to see how I'm using our True Alpha Trading system and our online tools to both implement the system that we teach you and show you how we use it to manage risk, or at least to show you how I'm using it to position myself and manage risk week to week, month to month, and then on a year to date basis. So, all of this again is just to both demonstrate how I'm using it, but this is also a good way for you to test drive this system and see if it's something that could possibly work for you. And you could do very similar to what I'm doing here, or you could tweak the allocation and the utilization of our tools and the way you want to distribute your risk and reward, different from what I'm doing here. You'll see that the course and strategy that we teach you for this system isn't a one size fits all. There are ways that you can really kind of tweak this to customize it for yourself, but the overall strategy and approach and broader positioning that we teach you is going to be similar across the board. There again, you can just tweak it in ways that suit your bias on the market or tolerance for risk, whatever it may be. You can tweak that distribution of risk and reward, as you'll see here in a little bit when I show you my position, in whatever way suits you the best. Okay, so hopefully this update's helpful. I want to go ahead and just dive in first and show you where we are on a week to date basis. So I'm just going to zoom in here on the price action from this past week. Now, the Friday before this past Friday was July 31st. So it represented not only the end of trade for last week, but it also represented the end of a monthly cycle. So what you'll see here, we have Monday from this past week, Tuesday, Wednesday, Thursday, Friday. Overall, we saw just an overall explosive move higher. We've been stuck. If you zoom out here and just take a look, we've been stuck in this range here from about 7,200 on the downside, or let's call it 7,300, somewhere in between there on the downside, and then right up here around 76.25 to the upside. This is a range that we've just been stuck in since about May of this year. So we finally broke through that range to the upside here, and from where the market was this past week to where we are now, just this explosive move higher over the course of last week. So from where we closed Friday before last on July 31st to where we closed this past week at 77.25 on the S&P futures here, that was a move higher on the week of about 3.65% on a week-to-day basis. So just a explosive move higher for the week. Now, I do just want to point out here, you don't need fundamentals, you don't need technicals, you don't need macro data, you don't need news headlines. You can pay attention and try to decipher what the market's going to do next using any of that kind of information. Okay, but what I'm showing you here is that you don't need any of that. Okay, because I don't believe that most fundamentalists or technical analysts or macro guys or people watching news headlines, if you think about what was circulating in the news and the big headlines just 2 weeks ago and last week to where we are now, okay, I don't think that most traders, whether you were a fundamentalist, technical analyst, macro guy or girl, or news headline chaser, most of those traders, I don't believe, caught this move that we saw this past week. So I don't think that most anybody saw this one coming. But if you follow what we teach you here at True Alpha Trading, is that we don't use any of that stuff to position ourselves, and I don't use any of that stuff to manage my risk. I'm totally positioned here and managing my risk around price extremes on the S&P 500. So the position that I took at the end of last week or week before last for the month of August here was totally positioned around a range of price extremes to the upside and to the downside. As I've told you, what I try to do, at least in this environment that we're in, sitting at all new highs as we made just this past week, I position myself to capture as much of that move to the upside as I possibly can, but I also am carrying a hedge to my position that protects me to the downside if we do see a substantial move lower from the levels that we're currently sitting at. But my positioning here and the way that I'll manage my risk over the course of this month really has nothing to do with fundamentals or technicals or macro data or news headlines or any of that stuff, okay? What I realize is that we're at a price extreme. We're sitting at all-time highs. We've basically been sitting at all-time highs for a lot of this year. And so I realize we're currently, the more we continue to move higher, the more we're continuing to push into a price extreme on the major indexes. Okay. So the position that I'm carrying is totally just paired and matched to that price extreme. I want to be carrying a hedge to my position that protects me if the market does start moving lower, right? If we see an explosion in volatility and the markets sell off heavily, I want to be in a position where I'm going to have a hedge kicking in for me to help me to the downside, right? To help me not lose as much to the downside. At the same time, though, as demonstrated this past week, the real risk could be not catching the move to the upside, right? There's opportunity risk in not being exposed to the type of move higher that we saw this past week. Okay, well, I realize that too. And so I don't want to be in a position where I'm totally capping my upside or limiting myself too much to the upside where I'd miss out on a move like we saw this past week. Okay, and so the way that I've positioned myself again is allocated to those price extremes. And what you'll see here momentarily when I show you my position is that I've caught pretty much every bit of the move that we got this past week. And that's because I'm positioning myself and again, managing risk around price extremes, not trading around, levels of support and resistance or fundamentals or macro or any of that kind of stuff. Okay. So that's just something I wanted to reiterate here. And again, last week just goes to show that maybe the biggest risk takers are the ones who aren't invested to catch the kind of move that we saw this past week. So just putting that out there. So on a week-to-date basis, we are significantly higher, right, at a move of 3.65% higher on the S&P futures here. But that's also going to coincide with where we are on a month-to-date basis. So again, this blue line and arrow here marks where we closed at the end of last month. So July 31st in this case, which again just coincides with where we are on a week-to-date basis as well. So on a month-to-date basis, we're also at 3.65% higher for the month of August. So a big move higher for a one-week move and a big move so far on a month-to-date basis. I'm just going to double-click and zoom out here just to show you where we are on a year-to-date basis. So from this red candle here and the arrow and line that's on the screen, that's going to mark where we closed at the end of last year. And from that close on the S&P 500 futures to where we currently sit after the close this past Friday, that's a move on a year-to-date basis to the tune of 12.82% higher on the S&P 500 futures here. And that's going to very closely match with the S&P 500 index overall. So pretty significant move higher for a year-to-date move. And we still have a lot of the year left, so we'll see where we go from here. What I want to do now is just click over and show you my position and what that currently looks like. So what I've got pulled up on my screen is the same position that I showed you this past week. You'll notice on here that I didn't go in and make any adjustments because all we did was rip higher on the index last week. And so I tend to make more of my adjustments when we see down moves with an expansion in volatility, and I'll make my adjustments into that type of move in the indexes, especially with the way that I'm positioned here, as you'll see here in just a second. But when we rip higher, I'm basically just letting this position ride because, as you'll see, I'm capturing most of the return to the upside by just holding the position that I have on here. So again, I'll just note here that at the top of the screen, you'll see these were the entries that I made to the put position tab on the S&P 500 spin calculator. Again, that tab is going to just lock in the position that I have on for the month of August in this case, and give me a static view of my position that I can now use to go in and make adjustments in order to just manage the risk of this position without, the the data in here updating on a real-time basis, right? So this is the position that I'm carrying for the month of August. So if I just take that off of the screen here, I'm just going to scroll down. Again, this is the same position that I showed you this past week, okay, with no changes to it. We closed after the move that we saw this past week right at 777.77 on the S&P 500 futures. So right in this range here. And so that's going to put me, again, what you'll see over here on this side is just percentage moves on the S&P 500. So if we move higher on the S&P 500 on a percentage basis, this is showing you where that's going to put the S&P 500 futures. The same thing to the downside. And in the middle here is my position relative to that same percentage move in the S&P 500. So if we get a percentage move higher or lower, it's showing you here where my account, the capital in my account is going to be relative to that same move. And as I highlight from week to week, the column here that's real key is this one right here, which highlights whether I'm underperforming or outperforming the S&P 500 relative to that same percentage move in the S&P 500. So that's a real key column here. Now, if we closed at 2777 on the S&P 500 futures, that's going to put us right in here, which you'll see puts my account right in this range here. And as I said, I'm capturing most of that move to the upside by carrying the position that I have on here. But I'm also at the same time, as you can see to the downside here, that I have this hedge that kicks in if we saw some type of a substantial move lower over the course of this month. Okay, you'll see that I have a hedge kicking into this position. And so overall, again, there could be more risk overall in missing out on a move like this to the upside, right? But there's obviously risk to any long position that you're carrying to the downside. And so what I just want to ensure by also trying to capture the upside opportunity that the market might have for us this month is I want to be carrying a hedge to my position so that I'm reducing exposure to the downside if we do see a substantial move lower, okay? And so again, not a lot to really update and show you. Again, I didn't make any adjustments this past month, but just, if anything, hopping back on here to show you that as planned, we are sitting at about, a 3.68% move higher, 3.65% move higher on the S&P 500, right? So again, we're right in here. And again, if everything works according to plan, which it has, then you'll see that if I pull up my position here again, that, I'm sitting at about 210,000 inside of my account here, which matches my position here, right? So everything so far is going according to plan. And that's the main thing. The main point of this update is just to show you that this strategy and the way that I've positioned myself for the month of August is working according to plan. Okay. So again, hopefully this is helpful for you just again to see how I've positioned myself for this month, how I'm using this to manage risk. And again, as you'll see here, this is just a visual representation of my overall distribution of risk and reward to this position. And you'll see that, again, if we continue to move higher inside of the S&P 500 here, that I'm going to capture most of that move to the upside. And at the same time, if we did see some type of a substantial sell-off from where we sit currently, that I have this hedge that's going to kick in and mitigate some of the loss that I would otherwise have by carrying the position that I have on here. Okay, so that's an update for you on my position and what it looks like after this move that we saw this past week. We'll hop back on here next week just to give a brief recap on the price action that occurred in the week to come, as well as an update on my position and what it looks like at that point in time. So with that, I hope you have a wonderful week, and we'll look to catch you here next time at True Alpha Trading. Thanks again. See you soon. Bye-bye.